for a central bank, it makes sense to intervene to smooth volatility, and clearly we've had a lot of volatility in the Korean won. And even before these political events, the Bank of Korea had been quite active in intervening. And of course, there's been discussion, can the NPS step in and support in terms of containing Korean won strength? So all of that is helping, but I'd say generally our view for the Korean won, not for political reasons, is bearish. We think dollar Korea ultimately will go to 1450, but that's for fundamental reasons. The Bank of Korea is going to be cutting rates, you have trade tensions, you have a weaker CNY, and all of these, and you have a weaker DRAM cycle, which is bad for Korea's export cycle. So we do think the Korean won will continue to weaken, but of course the central bank will smooth volatility.
But how do you discount and factor in the political aspect of things on the currency? Because obviously there is a direct link there as well, Adarsh.
Yeah, I mean, it's difficult, but the way the market trades it is risk premium. This is how we trade geopolitics, right? So you put in a risk premium in the FX market, in the volatility market, and that's what we're seeing. But beyond that, it's very hard to quantify geopolitical risk, and honestly, we don't try to do that. But if you just look at the fundamentals outside of that, the direction should be weaker for the Korean won.
Okay, so, and you're saying 1450 is your target by when?
This is by the first quarter of next year, so relatively soon.
Relatively soon,
and it doesn't matter which way it sort of goes this weekend?
In the near term, if the smoothing activity continues, you probably don't get there immediately. And then depending on the political outcomes, you could have big moves. But ultimately, if you're looking at the balance of payments fundamentals, that's something we expect by the first quarter.